when China decided to restrict its exports of rare earths, at the same time, it decided to restrict its exports of silver because it is a major silver exporter. And in fact, it has been managing the price of silver, keeping it suppressed under $50. It no longer suppressed the price of silver. Now, this is very important because silver is something which China uses a lot of. It has stockpiled, in my view, enormous amounts of silver. Yeah, sure. The fascinating thing about closing off the Gulf is it's not just oil and gas, but also the downstream products from refineries. And one of those, very important one, is sulfur and sulfuric acid. Consequently, the closure of Hormuz has cut out something like 30% of the world's export sulfuric acid. And interestingly, China reacted to this. She's the largest exporter, I think, by far. She reacted to this by stopping the exports of persulfuric acid. Why? Sulfuric acid is used for a number of things, but one of the most important uses is in the refining of non-ferrous ores, particularly copper and nickel, and to a lesser extent lead. Now, the reason this matters is that something like 56% of global mined silver actually is a byproduct of copper and nickel. So the shortage of sulfuric acid has had the effect, if you like, of creating supply issues when it comes to the refining of ores, of these non-ferrous ores. And to some extent, the bullish move in copper and also nickel, which have basically doubled in recent months, has been on the back of these supply issues. Plus, of course, in the case of copper in particular, China is stockpiling copper. But the difference between copper and silver is that copper is actually, there's lots of it around. It's not in short supply. But in the case of silver, which is mainly a byproduct of refining copper and nickel ores, silver is in very short supply. We know this. So it's a bit of a mystery as to why it is that silver is not performing, if you like, rather like copper or indeed nickel. I mean, these two base metals are really going through the roof. I mean, they're more or less doubled in recent months. Why hasn't this happened with silver? Silver is following a different track, and it's being priced in markets, I think, as a precious metal, not an industrial metal. So you've got this very interesting situation, Michelle, where it should actually be priced as a base metal, if you like, a precious one at that, rather than something which may or may not be a monetary metal, which, of course, is how gold is viewed. So I think is a very, very important point, which the markets basically have missed. And I think it is being mispriced as a result. Not so much as so far as I'm aware, the most efficient way of extracting copper and nickel from their ores is using sulfuric acid. It is the standard way in which it's done. So if you look, for example, at someone like Chile, which is a great copper exporter or producer, where the copper ore is marginal, basically it means that it's not worth refining. So you can see that there is this disruption. I don't see that this is a fantastically major disruption, but it is one of a number of factors which appears to be driving the copper price higher and also that of nickel. So my big question is, why isn't it doing the same to a far superior metal in terms of its conductivity and its thermal conductivity, electrical and thermal conductivity? And silver is used in just about all the applications that copper is used in. So, this to me is an anomaly.
Middle Eastern tensions are severely threatening sulfuric acid supplies, a critical chemical used to extract metals. Since most silver is mined as a byproduct of copper and nickel, this massive chemical shortage could indirectly slash global silver production.
There is obviously a lag, and I would say that the lag is something probably to do with the shipment of ores as much as anything. So going across the Pacific, say from Chile to China, you're probably looking at about 4 or 5 weeks. Then on top of that, of course, then, the ore has to be taken and be processed and all the rest of it. So you're probably talking about 5, 6, maybe 7 weeks. Rather like the oil story, that hasn't really hit the West yet. I mean, we see oil here at something like $90 odd a barrel, whereas it's actually changing hands in Asia at prices of up to $150 a barrel and more. So you do have these lags, I think, which are being, to some extent, due to logistics, shipping logistics. And also, I think the other thing is that the markets just, they're not really pricing it properly. I don't think markets actually know how to deal with this one. Well, no, I mean, China, basically, there just isn't the supply from elsewhere. There are exporters of sulfuric acid around the world. This is true. But the big sources are basically, the Gulf, and China. Now, some is produced obviously in America. I mean, basically wherever you get refining of oil and gas, and it tends to be the lighter oil, as I understand it. I'm not an oil expert, but the sort of, if you like, the Gulf crude is absolutely suited for producing sulfur and sulfuric acid. And it is having quite an effect on sulfides. And the prices of sulfides have actually doubled as well. So this is something, and that's in markets. So, again, I come back to this question. Why isn't silver performing? Silver is working on a completely different set of parameters, if you like. It led gold, I think, by the nose through the last quarter of 2025 upwards. Peaked at 120. Now there is a story there which I think is worth talking about. It really all happened on October the 9th when the lease rate in London went up to 40%. I think that story is well known. The reason for this, however, I think has only really been understood after the event. And that is that when China decided to restrict its exports of rare earths, at the same time, it decided to restrict its exports of silver because it is a major silver exporter. And in fact, it has been managing the price of silver, keeping it suppressed under $50 for decades. That suddenly changed, and it changed that late September when the rare earth story broke. The reason this is important is that China obviously took a major strategic decision about the export of things like rare earths and silver and so on and so forth at that juncture. It no longer suppressed the price of silver. Now, this is very important because silver is something which China uses a lot of. It has stockpiled, in my view, enormous amounts of silver, going all the way back to the early 1980s when the People's Bank was actually appointed by law, by legislation, by regulations, by the Communist Party to manage national silver stocks along with gold and along with the foreign exchange. It had it's an absolute monopoly in those three things. So the whole thing in terms of foreign exchange, gold and silver came together. And so there is no doubt that as well as being a major miner, as well as being a major importer of non-ferrous ores and extracting silver that way, it has accumulated a lot of silver. So it got to the point, I think, where it suddenly decided it didn't want to do it. And I think I would tie this in partly to the rare earth story. But the other important thing was it was about then that the US Geographical Survey decided, and it recommended to the government that silver should be a critical mineral. And hey presto, it became a critical mineral. So from China's point of view, was she going to pump silver into the market to try and suppress the price, only to end up feeding the US in terms of its stockpile requirements of silver? And the answer is obviously no. So I think that's why the whole thing, that's why silver really exploded from 50 up to 120 really from that sort of very early October time. And it's come back. And the fascinating thing is that even though it has drifted back from that high level, in the first quarter of 2026, China continued to become a very, very substantial net importer of silver. In the first quarter, she imported something like 1,630 tons. Mm-hmm. Why, you might ask, with such a large producer, miner and all the rest of it, and refiner, producing silver, why would they, buy in so much silver? Well, I think the answer is there's been a complete change in policy. And I suspect that she doesn't care about industry outside China in the rest of the world. She wants to just hang on to whatever she's got for herself. And it's not unique to silver.
China has emerged as a dominant force in the global silver market. Recent import surges prove Beijing is aggressively securing physical supplies. By designating silver as a critical mineral, China is prioritizing long-term resource security, signaling a massive, ongoing shift toward permanent commodity accumulation.
No, I don't think as a negotiating tool. It's a very interesting question as to exactly what China's position is on this. I think that what China would prefer is not to see the global economy tank, which looks like being the consequence, if you like, of the closure of the Straits of Hormuz. And it's quite clear, if you follow this closely, that the Hormuz Straits are not going to open for some time. America has got to basically admit that it is defeated. And with the current president, it's very difficult to see how that can come about. So this is a real economic disaster for the rest of the world. And I think China's approach to this is that if she was asked to support Iran, which basically she does, I think that she would express a preference, if you like, for moving towards opening the Hormuz Straits. Now, that having said, China doesn't interfere in other people's business. This is a decision as far as China is concerned, which is entirely in the hands of Iran. What Iran has done, I think, is it's turned around and it said, we do not want America in what they call West Asia, because it has been the Satan, if you like, with sanctions and everything else. And now we have the behavior of a very unpredictable president in diplomatic terms. They don't trust anything that comes out of America at all now. And it's quite clear that what's going on with Israel is something which is very, very unpleasant as far as Iran is concerned, with Hezbollah and so on. And, this could rack up even further. If the Red Sea closes, for example, when the Houthis kick off in the Yemen, that is a distinct possibility. So we've got all these problems. And coming back to China, they're looking at their, if you like, resources, I think, in a holistic way and saying, really, until we know what on earth we're doing with, with the world, we better hang on to what we've got. I think that's really where they are now. Well, going back, you're talking about, the paper markets, sort of being used to manipulate prices and so on and so forth. I think it's probably, the word I would use is the paper markets have dominated silver pricing. I understand market making and I understand what is involved. But rather than go into that, I'll try and answer your question about open interest. In the old days, before 2025, when you had speculative interest and all the rest of it, and you had good turnover, you would have speculators who would go in, they would buy contracts, they would put in a stop loss, whatever, and the swaps, who are basically the market makers and bullion bank trading desks, would know pretty well where these stops are. And if they saw a slowing down in the momentum of speculative buying, then it would be in their interest to push the price down and trigger those stops. And it was a very, very profitable business. The trading side of it is immensely profitable. And so long as the price was subdued below that $50 level, the the end of the month valuation of those short positions was sort of, you could bear it, given that you were making an awful lot of money on the trading side. That's now no longer the case. We're looking at prices well over $50 an ounce. And consequently, the swaps, again, market makers, bullion bank trading desks, are in the hole for an average of well over $3 billion each. If you look at the numbers that come out from the CFTC. So, this is a very uncomfortable position, particularly if, as a bullion bank, you have the intelligence about what's really going on in the silver market, how it's being drained out of the West and going into the East, how you see China has now become a substantial net importer, as you were saying earlier, Michelle, hitting record quantities, in some months, then you are frightened. You don't like this. So what you will do is you will, if someone wants to come in and buy a number of contracts off you, you will make a pretty wide price. You will say, well, if you want to sell, taking contemporary prices, if we say something like, you can sell to me at 74, but you can only buy at 77, whoa, I don't know that I want to do that. So you can see that what they're doing is they're chickening out of the the futures market. Now, what happens on COMEX is a pretty good mirror for what's going on in London. So overall, I think what we're seeing is the potential for another liquidity squeeze. The level of open interest is a very, very good indicator of the level of speculative interest in a contract. And with it at the lowest it's been for nearly 20 years, that really tells us that no one, I mean, okay, there are some long positions, obviously, because you got 125,000 contracts out there. But the idea that you've got, punters in there saying, I'm going to buy this and, hopefully I'll spin a bit of money overnight or over the day. I want to be out on a day trader sort of thing. That's gone. That's not there. So we just don't have that liquidity. And I think it's quite clearly an indication that this contract is actually failing. And the other thing that's interesting, I know we'll probably come on to gold a little later, but we've got exactly the same thing in gold now. I mean, the level of open interest in gold has just collapsed to, again, levels we haven't seen for almost 20 years.